Good morning, everyone. It's Ben Buckner and Dan Bossi joining us from Istanbul, Turkey this morning. It's Wednesday, September 3rd. Markets chopping around very much back and forth so far this week. And I think, Dan, we've got kind of a fundamental battle, at least, between, weather, that extended range rainfall just can't get pulled into the eastern Midwest. And so it does look like we've got net soil moisture loss for another 10 days or so. What that means for yield, of course, will be debated long term, but also we've got, I think, souring relationships with a lot of the world, the US, Asia specifically, and of course China. So the market, I think, is putting those pieces together. We think that export demand matters most in the long run, and I think that's something the soybean market's focusing on today, despite the drop in condition rating. So I think it's telling to us. But what are you seeing in the market this morning? What's jumping out to you specifically?
Well, I think you're right, Ben. It's this battle royale between, the avoidance of China buying U.S. soybeans, and then, of course, what's going on in terms of U.S. weather. And you're right, the forecasts just can't seem to pull that rain that's in the extended range forward, and that is giving us some reduction in crop size. But, when you think about it, in my mind, I think that the avoidance of China being a U.S. soybean buyer is probably paramount for the market going forward. We will talk about reductions, and we'll get into that in a little bit here. But I want to talk a little bit about China because increasingly Trump and China are getting farther apart. Yesterday Trump tweeted out that indeed the Chinese are conspiring along with the South Koreans and of course the Russians against the United States. And so, that was not the kind of the tweet that Trump really the markets like, or that Trump likes to make. And I'm worried by this because increasingly I'm hearing from Chinese contacts that they are avoiding U.S. soybeans and may avoid U.S. soybeans until a trade deal is done, which some people now fear is not until the end of the year or early next year. That leaves the United States without a real significant buyer of U.S. soybeans. And increasingly, we're hearing the administration talking about payments to U.S. farmers kind of as compensation, Trump dollars, if you will, through tariffs that'll make up the difference in China's avoidance. But if China avoids this, and we do have another auction occurring, China announced another auction, weekly auction, a smaller total, a little over 60,000 tons for Friday. But this now seems to be a regular cadence of auctions going forward. So as I look at the overall scope of things, one of the things I worry about is China decoupling from the United States, in particular from agriculture. But this has become a negotiating lever with China, and it does have ramifications for the U.S. soybean market. If you look at when U.S. soybeans are exported to China, this is global soybean exports to China graph. You can see the United States really makes up a big hunk of that in the September through January timeframe that again picked up, as you see there in blue, from South America. We end up in this lull period, if you will, from January, December, February before it goes up. But China's absence in September, October, November is concerning to me. And yesterday, China bought another 3 or 5 cargoes of Brazilian soybeans for November. So they are done. They will not import any U.S. soybeans in September or October. November, there's still that potential if a trade deal can get done. But now the Chinese are aggressively buying November out of Brazil. And I believe they'll pretty much try to take that to December, leaving us a very narrow window, if any window at all, to export soybeans going forward. Now, think about China taking 22.5 million tons of soybeans last year, a little over 24 million tons in the year prior. If they don't take U.S. soybeans and then switch to South America due to price, we will see some demand coming back from non-Chinese destinations to the United States. But you can't make up China. You can't make up 22 million tons. I'm not saying all of that will be lost, but as we look at the critical period heading into harvest, I am saying that we've lost 9 to 11 million tons already. That's 360 million bushels of soybeans, give or take. And if you think about that on the balance sheet, that gets to be very important, even if U.S. soybean yields are coming down. As you look at crop condition ratings yesterday, they did drop 2% in corn, 4% in soybeans. A lot of that soybean percentage drop is in the dry areas, Kentucky, southern Midwest, northern Delta states. corn areas, we're also seeing some declines. Though, again, it's getting a little late for rain with, increasingly 70% of the U.S. corn crop in dent and about 15% mature. It's soybeans that the market will focus on. A year ago, from the August report to the final in January, U.S. corn yields came down 4 bushels an acre, down 2.5 bushels an acre in soybeans. So as you think about it going forward, this would give you like a 51.1 yield in soybeans, 184.5 kind of yield in corn. Those are the things the market needs to think about going forward if we don't catch a rain in September. Again, we had a very special crop. It's still very special when you look at these ratings relative to 5-year averages, and it's still a big crop, but it's not as big as it could have been. Also, as you think about the market and where we're heading, I think it's very important to think about the wheat market. World wheat prices are in decline. I'm here in Istanbul with a lot of Russian exporters. The Russians are trying to sell wheat to the Turks. They, of course, have very good coverage here in Turkey into late December, January. But as you look at this graphic, this is Paris wheat futures on a monthly basis. And you can see that when you look backwards in time, you can really get a sense that we are on the lowest levels in the last 5 years. Now, 184 is a very key level. 172 then comes into play. If we don't hold that in September wheat futures, those are the downside targets. The one thing I'll mention for those of you watching the corn market is the price of world feed wheat now at a $208, $209 a ton is the same price as Gulf corn. So there is a push to find homes for feed wheat, and that will cut into U.S. corn demand. Also, today we find the Brazilian FOB price in Paranaguá Santos down about a nickel. So even the Brazilians are becoming more aggressive trying to look for world demand. When you talk about weather, we do not have enough rain across portions of the southern and central Midwest. Illinois stays dry. Portions of Indiana, Ohio get some rain. Kentucky gets some rain as you look at this 7-day NOAA QPF forecast. But it's going to be cool. So one difference compared to last year is how cool it will be in the last half of August and the first half of September. This will help yields. This will give soybeans more pod size. But again, we still need 1 or 2 rains. I'm concerned about seed moisture. That's one of the reasons why the crop last year fell so hard in yield to the January report. If we get 1 or 2 more rains in September, that will help that seed moisture. But again, spotty nature of rains, we'll see how this all pans out. But we need the Gulf to open up to get better rains across the Midwest. If you look at where it has rained in the last 30 days, though, you can see the dynamics of what's happening here. Better rains across the Dakotas, northern Midwest, through the plains and the Delta in the southeast, but we're missing some of that area of the southern half of the Midwest, really from, let's say, I-70 southward into the northern Delta. That is the area that's the driest, and that's where condition ratings fell the sharpest yesterday. So again, not belt-wide, mind you. It's not as bad as last year, and we have had enough rain to take some of these crops home. This is why Ag Resource still believes that the U.S. corn yield estimate will be above 186 in the September report, and soybeans probably near or in that 52.9 to 53.3 bushel range, at least for soybeans going forward. But again, you can see the outline of rain as we head into the final couple of weeks here of the major growing season. Lastly, Ben, I'll finish up here with a chart showing the StoneX corn estimate versus the NASS yield in September. Thursday is when StoneX is supposed to come out. We were hearing that estimate would be out on Monday later in the day, but they pushed it forward to Thursday. As you can see here, there is a strong correlation. I'm looking for StoneX to come out with a relatively good yield again, maybe that 186 to 188 kind of level. That would tell me anyway that NASS is still going to come up with a big crop estimate. If we look backwards to last year, NASS moisture adjusts its kernel seed moisture to 15.5% in corn and somewhere around 12.5% on beans. So when you think about that, it really means the January report, when farmers' feedback information will be key, but that also depends on rain here during the month of September. So in a nutshell, we believe that the battle will be won by what I believe the China avoidance of U.S. soybeans, and we still have some large crops here yet to harvest, Ben. There's going to be storage problems. We still think the markets have downside risk, and as farmers, when you get rallies, you need to reward those rallies with sales.
Yeah, I think that's exactly right, and a really good rundown. that the yield debate is continuing makes perfect sense given recent weather, I think upcoming weather. I think what jumps out to me too, and what we'll need to watch pretty closely is, like you mentioned, in the wheat market. We've also seen a big drop in FOB premiums for corn in South America. And so, on paper, at least, US corn is no longer the cheapest. Does that start to impact what has been a really incredible pace of export sales? And that's the case. I still think we're kind of stuck here. And to your point, we've got a lot of crops to harvest, and how does the cash market sort all that out? So a lot of dynamics in the market. Weather is one, sinking grain cash markets is another one. So be cognizant of all this as we get rallies, and again, risk management top of mind. As usual, all the best in the markets. We'll be back tomorrow, Dan from Istanbul, to break down what's happening in the wheat, corn, and soybean markets. And so we'll see you then. Bye bye.